Heya Cryptozens, welcome back to the Crypto Overnighter. My name is Nikodemus and we do crypto news analysis nightly at 10 p.m. And keep in mind, none of this should be considered financial advice. And it's Saturday, February 18th, 2023. Now, we have a big piece on Kwon and Terraform Labs that we're gonna get to in a minute, including Terraform's mystery financier from May of 2022. We'll talk about all that in just a minute, but I need to talk to you about this malware going around stealing people's crypto. Starting in December of 2022, two types of malware have been prowling around together on the internet. They're a piece of ransomware called MortalKombat and Laplas Clipper. These are malware programs trying to steal cryptocurrencies from people who aren't being as careful as they should be. Malwarebytes found these two new types of malicious software, and at present, we don't know who made them. This malware is targeting investors who use desktop computers to manage their crypto. Cisco Talos is a threat intelligence research team, and they found that MortalKombat Ransomware and Laplas Clipper malware have been in the wild in the internet since December of 2022. And while the majority of the victims are from the US, some are from the UK, Turkey, and the Philippines. These two types of malware work together to steal information from the user's clipboard. This clipboard usually contains letters and numbers that the user has copied. The malware looks for wallet addresses that the user has copied. Then it replaces the wallet address in the clipboard with a different one. Now, this attack depends on the user not paying attention to the wallet address of the sender. If the user isn't careful, the attacker gets the cryptocurrency. The attack targets individuals and organizations of all sizes. There is no obvious specific target. After infecting the computer, MortalKombat Ransomware encrypts the user's files. It also shows a ransom note with payment instructions. Now, Talos' report showed the URLs listed in the attack. One of the URLs connects to a server in Poland at a specific IP address. Now, this server downloads the MortalKombat ransomware. Analysis done by Talos shows the server is running an RDP crawler. This crawler scans the internet for an exposed RDP port of 3389. So if you're savvy enough to scan or block ports on your machine, that's one potential short-term band-aid. Obviously, the best is to never have been infected at all. So keep that in mind when I tell you that Malwarebytes explain that the Tag Team campaign, it starts with an email. This email says that your payment has tied out, and it's made up to look like cryptocurrency. This email has a malicious attachment. Stop opening random attachments. If this attachment is opened, it runs a batch file. That batch file helps download and execute the ransomware. As always, early detection is the best prevention. Investors can prevent this kind of attack from affecting them by detecting the malicious software early. So, make sure your antivirus software is up to date. Make sure your drivers are up to date. And finally, make sure that any communication that you do receive is from an official source. But the biggest vulnerability in computer security has always been the human actor. Now, that said, ransomware revenues for attackers fell by 40%, down to $456.8 million in 2022. This is because more victims are just refusing to pay. Chainalysis revealed that these figures do not necessarily mean that there were fewer attacks in 2022, just that they got less money. On Thursday, the U.S. Securities and Exchange Commission sued Terraform Labs. They also included Kwon in a separate suit. Now, according to the complaint, the SEC has accused Terraform and Kwon of misleading investors. The SEC called both the yield-bearing anchor protocol and the Luna token itself crypto asset securities. The SEC charged Terraform and Kwon with fraud, selling unregistered securities, selling unregistered security-based swaps, and other related claims. The SEC accused Terraform and Kwon of misleading investors about the stability of UST. Now, UST was an algorithmic stablecoin that was supposed to be pegged to the US dollar. The suit said that if UST fell below its $1 peg and wasn't restored quickly, the entire Terraform ecosystem would be in trouble. UST and Luna had no reserve of assets or any other kind of backing. According to the complaint, Kwon and Terraform worked with a U.S. trading firm that was not named. And we'll get back to that because this piece of information does figure into tonight's story. The firm helped restore UST's peg after it fell almost 10 cents in May of 2021. So this firm bought discrete amounts of the UST token and they received Luna tokens from Terraform. The complaint alleges that after UST's recovery in May of 2021, Terraform and Kwon made some misleading statements. They talked about the algorithm underlying UST that maintained its peg to the dollar. However, they omitted the true cause of UST's repeg, the deliberate intervention by that unnamed firm. Timothy Masad is the former chairman of the Commodities Futures Trading Commission. He said that the SEC is right to go after Terraform Labs and Do Kwon. Masad, who is currently a research fellow at Harvard University's Kennedy School of Government, said that the SEC was right to make the charges. He said, if you promise people a 19 to 20% return on a token when they invest, that's a security. No disrespect to Mr. Masad, but I wouldn't call claims of 19 to 20% of security. I call that a red flag, but whatever. As we know, Terra USD lost its peg back in May of 2022. This caused over $40 billion of market value losses. People thought that Do Kwon had discovered a perpetual money machine. Who wouldn't want in on something like that? The SEC's charges were the first detailed explanation of what they believe caused the Terra USD collapse. The allegations were different from what Kwon and his partners had presented to investors in the media. Here are some important points from the charges. Kwon and his team claimed Chai used the Terraform blockchain to settle transactions. The SEC alleges this is false. Daniel Shin was also a founder of Terraform. He also founded the Chai Corporation. Kwon sat on Chai's board. The two firms shared office space and personnel. Now, Chai and Shin are being investigated by the Korean authorities over some misunderstandings. Forecast News reported in November, quoting a Chai spokesperson saying, quote, Daniel will fully cooperate with the ongoing investigation to clarify the misunderstandings and to resolve such speculations. According to the SEC, Terraform and Kwon made false and misleading statements about Chai's involvement to encourage investments. They did this through a slide deck presentation to a U.S. institutional investor and in Kwon's public interviews. The SEC claims that they touted the speed and efficiency of Chai in using the Terraform blockchain, all of which was a complete fabrication. No, Kwon's team used a server to make it seem like Chai was using the Terraform blockchain to settle transactions. This server processed data about Chai's real-world transactions with Korean merchants. It then instructed the Terraform blockchain to replicate those transactions, to make it look like they had been originally done on the blockchain. The SEC accused Kwon and Terraform of making false statements about Chai's involvement to solicit investments. The SEC also accused Terraform of breaking securities rules by not registering various products. Among them were UST and other tokens associated with Terraform, wrapped tokens, and mirror tokens. The SEC alleges that 5 assets associated with Terraform were, quote, crypto asset securities. These included Luna tokens, wrapped Luna, UST, mirror tokens, and M assets. The SEC applied the Howey test to the assets in the complaint. The Howey test comes from a 1946 U.S. Supreme Court case involving citrus groves in Florida. Given that, there are some people, myself included, who question the relevance of the Howey test when it comes to crypto. But that's a different episode to come. The complaint in this case is significant to the crypto industry as it will determine whether the tokens in question are securities. In recent weeks and months, industry associations have argued that tokens are not securities and the SEC lacks authority. And finally, the SEC alleges that Terraform and Kwon misrepresented Terra USD's stability to investors. They claim that the token was an algorithmic stablecoin that would maintain a 1-to-1 peg with the US dollar. That didn't happen. In fact, in May of 2021, Terra USD's peg slipped, causing concern among users. And they were warned that if the peg was not quickly restored, It could be catastrophic for the entire Terraform ecosystem. Now, if you were around at the time, you might remember that Kwon rounded up a bunch of money for something called the Luna Foundation Guard. And the Guard, or LFG, they were supposed to deploy some $1.5 billion in Bitcoin to help USD maintain its peg. Now, we know that failed. Basically, they said they weren't ready to deploy the funds efficiently. I have my doubts, but we'll get back to that. Kwon sought help from an unknown third party to fix the depegging issue. Jump Trading is reportedly that third party. Now, Jump bought a significant amount of UST to restore the peg. Now, the fix was publicly touted as a success, attracting billions of dollars from investors. Jump made a profit of approximately $1.3 billion from its association with Terraform. This is all according to the SEC filing. The SEC has not charged Jump Trading or even accused the firm of wrongdoing, so let's be clear on that. TerraUSD crashed in May of 2022. That's not what this is all about. However, the SEC's allegations relate to a depegging incident that occurred a year earlier. The SEC alleges that Terraform used human traders to maintain the stablecoin's value, rather than relying on the algorithm that it claimed supported the system. The SEC complaint alleges that in May of 2021, when UST became unpegged from the US dollar, Terraform and Kwon secretly planned with a third party, the US trading firm, to buy large amounts of UST to restore its value. After UST's price increased, Terraform and Kwon falsely claimed that the algorithm had successfully repegged UST to the dollar. Jump Trading's crypto-focused unit, Jump Crypto, was launched 4 months after the May 2021 depegging incident. Now, the SEC alleges that Terraform Labs worked with Jump from November of 2019, with Jump receiving market making for Luna and TerraUSD in return for compensation, usually paid in Luna at a discount to the market price. Now, the SEC claims that Terraform improved the compensation terms for Jump after it intervened in May of 2021 to support TerraUSD's value. The firm would now receive Luna tokens at 40 cents each, regardless of the prevailing market price, which was sometimes over $90. Now, 40 cents each versus $90 for you and me is a heck of a discount. According to the SEC, Jump Trading made a profit of around $1.28 billion from the Terraform deal. Now, whatever happened to that $1.5 billion denominated in Bitcoin that the Luna Foundation Guard was supposed to deploy to keep UST on its peg? Did they just do a bad job of deploying it, as they claim? Or did something else happen? Or maybe someone happened to it? Because according to investigators, Kwon has more than 10,000 Bitcoin that he keeps secretly. Now, Kwon transferred that Bitcoin from Terraform and other related entities to a self-custody wallet, which should be a lesson to everyone. Even accused criminals know that self-custody is best. Since May of 2022, when UST crashed, Bitcoin from that wallet was transferred to an unnamed Swiss bank and then changed into fiat. Over $100 million in fiat currency has been withdrawn from the bank since June of 2022, and they say crime doesn't pay. Caitlin Long is the CEO of Custodia Bank, and she criticized regulators and lawmakers in Washington, D.C. She thinks that they've taken the wrong approach by cracking down on the crypto sector. Long also says that she warned them about major fraud. However, she thinks that they ignored her warnings. Long wrote a blog post on February 17th. The post was called "Shame on Washington, D.C. for Shooting a Messenger Who Warned of Crypto Debacle." In the post, she criticized the government's approach to regulating crypto. She said that they're not protecting investors and are pushing good actors away. Long thinks that they will only make risks go underground. The government will then have to keep chasing after those risks. Long emphasized that her digital asset custody firm is trying to create a lawful and compliant alternative to protect people from crypto scams. She's been calling out the worst of the offenders in the crypto industry. However, she thinks that policymakers today are more interested in going after the innovators. According to Long, she tried to work with government agencies, but her efforts were not successful. Recently, her firm, Custodia Bank, was attacked by several government bodies. These included the White House, the Federal Reserve Board of Governors, the Kansas City Fed, and Senator Dick Durbin. Now, Long thinks that Senator Durbin made a mistake when he compared Custodia Bank to FTX in a Senate speech. Long said that Custodia Bank tried to become federally regulated, which is something that bipartisan policymakers claim to want. Instead, Custodia Bank was denied and criticized. Long thinks that today's regulators in Washington, D.C. are embarrassed. They're embarrassed because they were not able to stop the criminals in the crypto industry. And now they want to take action. Now they want to look tough. Now they want to look effective. However, Long thinks that the same policymakers who were charmed by the fraudsters are the ones now calling for a crackdown. And she thinks that they are throwing out the good with the bad. Long said on Twitter that she and many others tried to warn DC and to help law enforcement stop fraud before several crypto firms imploded in 2022. However, their efforts were unsuccessful. For the first time, Long publicly revealed that she gave evidence to law enforcement of probable crimes committed by an unnamed crypto firm. She did this months before the company imploded and caused losses for millions of customers. Flags and illegal activity to regulators have gone ignored for years. Maybe now they'll listen. Neil Mohan is the new CEO of YouTube. He's replacing Susan Wojcicki. Wojcicki left after 9 years as CEO. She said she wants to focus on family, health, and personal projects. She helped introduce the revenue-sharing model while in charge. Wojcicki will be an advisor for Alphabet going forward, and Mohan was previously YouTube's chief product officer. He removed the video dislike button and introduced YouTube Shorts and YouTube Music, and now he's the CEO. In February of last year, Mohan shared potential plans to integrate new Web3 features on YouTube. This includes virtual reality content and content tokenization with NFTs. Some people were not happy with this plan. Mohan believes that NFTs can help creators connect with their audiences and earn more money. He gave examples of videos, photos, art, and experiences that could be tokenized. Mohan wrote in a blog post on February 10, 2022, that Web3 can benefit creators. He thinks that blockchain and NFTs can help creators earn money and work with fans. The Web3 related plans were not launched last year. That may change now that Mohan is the CEO of YouTube. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, please like, follow, subscribe. Leave a rating or review. And in the meantime, we'll see you tomorrow night. Heya Cryptozens, welcome back to the Crypto Overnighter. My name is Nikodemus, and we do crypto news analysis nightly at 10 p.m. And keep in mind, none of this should be considered financial advice.